You can start now, Dave.
Okay.
We are live, Dave.
Okay. Hello, everybody. One of the shining stars in the bloodbath yesterday was WTI. Normally, WTI would lead stock market correction. That certainly didn't happen this time. And if you're confused about what's happening in the crude oil market, today is a good day for you because you can hear from Anas Alhajji, who I've interviewed several times. There's a little bit about Anas. He just informed me that he's now lead analyst on an Arabic oil news platform that's mainly read by Americans in French. So, you know, this is a very interesting situation we find ourselves today. Anas, thank you so much for giving some of your time to TradeGATEHub today.
You're welcome. Good morning, Dale.
Good morning, buddy. So we're looking at energy bottlenecks everywhere. I believe that today's rally in the oil market has something to do with what's happening in Kazakhstan. There was some type of social unrest because prices were raised, and I'm not sure the form of energy, but the whole population had converted their autos to use it because it was cheaper, and they doubled the price. Is that the correct scenario or narrative for that?
Well, two things here. First of all, it seems the media missed on the fact that we lost oil flow in pipelines from Canada and North Dakota in the last 3 days because of the cold front. Temperature dropped substantially, and the flow stopped in Keystone, in the part of Keystone, of course, that's operating. So we did lose some oil here in North America, and that's played a factor. In terms of Kazakhstan, what happened is countries about 10, 15 years ago, they thought they can convert some transportation to natural gas, and that is cleaner for the environment and cheaper.
Yes.
But after some cities around the world went through the experiment, they found out that if they convert to LPG, liquefied petroleum gases, that will be better. So they started converting to LPG, and LPG was supported by the government. It was cheap, and people converted simply because the government induced that by having them at lower price. And all of a sudden, they woke up one morning and prices doubled. But we have to warn everyone to pay attention to the fact that when these events happen, the common denominator in the world are bread prices and fuel prices.
Okay, bread.
These are triggers.
Yes.
These are not the reason. People being fed up. If you look around the world, even in Sudan or other countries, people being fed up for a long time, but all of a sudden they found the trigger, and that trigger usually is a common denominator.
Price.
So in this case,
how
the
much
common
something
denominator was
costs.
fuel. Correct.
Yeah.
But those guys been suffering for a long time.
Yeah.
And they've been oppressed for a long time. So the reason is not really fuel prices. This is just the straw that broke the camel's back.
Okay, so we have these social upheavals over prices. You know, farmers aren't real happy about not being able to get fertilizer from China. And, you know, you once said to me, and you're known for it in FinTwit, is, you know, a lot of people say, well, OPEC is a market manipulator. And you say, no, OPEC is an oil market manager. Can you explain the difference to our viewers of people saying, well, they just manipulate it? What's the difference between being manipulated or managed? And I'll ask my wife that question later.
Well, let's go over briefly over the oil industry history. If you look at the last 150 years, and if you focus on prices, production, and demand, what you find is you find some stability when the market is managed, and you see massive volatility when there is no market manager. So we started the oil industry with market management by Standard Oil that was owned by John Rockefeller. And you can see stability there. And what John Rockefeller basically was looking for was the waste or the wastage was very high at that time. People took only the kerosene out of oil and they dumped everything else. He is the one who came up with the idea we can use other products, including lubricants. But he brought in efficiency to the market. He brought in lower cost to the market. He brought in stable prices to the market. When the government broke standard in 1911, immediately volatility skyrocketed. And the government found itself, oh my God, what I have done. Now I'm going to regulate the market instead of Rockefeller.
Yeah.
But because it's a federal government, they cannot regulate the state. So they help the states basically form all those commissions, just like the Texas Railroad Commission or the Oklahoma Corporation Commission. They created those commissions to regulate prices. And when they couldn't, they did send the National Guard to the fields to force shut in. So literally they used force to shut in. That was a market management, and it was successful. Then we have the Seven Sisters controlling the outside market, which means that everything outside the United States was mostly controlled by the Seven Sisters. So between the Texas Railroad Commission on one side, the Oklahoma Corporation Commission, and the Seven Sisters, the market was regulated. And if you look at prices and production, everything was steady. We had all kinds of efficiencies. Prices were stable. The market was stable until things start changing with the coup in Iran in 1951 during that revolution when they threw out the Shah, and then the coup against it in 1953 that the CIA managed. And then we've seen all kinds of problems after that. We've seen the nationalization of the Suez Canal, and then countries started nationalizing oil assets, and the Seven Sisters lost control. Then the US government intervened by the price controls, as you recall, in the 70s.
I do.
So they became a manager.
I was very young. I was a little boy. I'm kidding.
Well, we all have black hair if we have it.
Yeah. So the 70s. Does this era remind you of the 70s in certain respects? I mean, I know history doesn't repeat, but is it rhyming to you in any way comparatively?
Yes, there are some similarities in ways where, if you look at the 70s before 1973 embargo, we had massive increase in demand while supply was not keeping up. So that's really the major similarity in this case.
All right.
And then the US regulated the market until Reagan came in, and Reagan overnight, basically, he just liberated oil and gas markets and energy markets and literally threw the ball to OPEC court. OPEC was established in 1960, but never had quota, never managed the market. And all of a sudden in 1980, the ball is in their court and they don't know what to do. Okay. And then they decided to impose quota, but that quota failed, and we had the collapse of the market in the mid-80s as a result of that. So OPEC basically failed as a market manager at that time.
Okay.
And as we went through this, we found out that OPEC really was not a monopolist, was not a cartel. The power that was assigned to OPEC is really the power of certain members, mainly Saudi Arabia. And that's the mistake basically researchers made in academic papers and others. The power of OPEC, the power of Saudi Arabia was assigned to OPEC. So it's really, during that time and until today, it is still about Saudi Arabia. And the Saudis basically hold these things. The only difference is the Seven Sisters controlled everything. They controlled the upstream, midstream, downstream. Now OPEC control only the upstream and only a portion of it, about 40% of it. So they don't have that much power, but they can manage the extreme volatility. They can prevent prices from going to 150, and they can prevent prices from going to $10. We already seen that several times in the past. We've seen
recently, COVID. Actually, futures went negative and people were scarred and couldn't get long for 2 years. And now they love it.
Absolutely. So they manage this extreme volatility. So the market, although I am a free market believer, I believe in free markets. But when it comes to natural resources, given the nature of the industry where your sunk cost is paid upfront, which is the largest part of your cost. So if you look at the operating cost versus the total, it's very small. And that's another problem here people need to understand. When market crashes, operators focus on operating cost only. Total cost does not matter. And that's a problem because when the market crashed in 2015, OPEC members were saying, oh, prices went below 48 and shale continued to produce. Shale companies continue to produce. Why? So why 48? Oh, because consultants told us that the average cost was 48 and we already brought the prices below 48 and they're still producing. And the answer was, duh, you focus on operating cost. The operating cost at that time was about 22. Okay. So even if you bring prices to 25, none of them is going to shut in. We've seen the shut in when prices decline below $10, as you know, in 2020, because the price was lower than the operating cost. So when we have a market crash, we worry about only the operating cost. We don't worry about the total cost. So to conclude, the market needs a manager. And right now we have OPEC Plus. OPEC Plus manages the extreme volatilities. They cannot manage the market day to day. They cannot manage the market perfectly, but they can manage the extreme volatility.
Is that why you don't believe we're going to see $100 oil real soon? Because of their management skills, and they know that may bring new production into the picture again. I mean, they took it down. They managed to bankrupt a lot of shale oil producers, so that was excellent management if they wanted to knock out competition. Was that their strategy a year or so ago?
Well, a couple of things here. First of all, let me turn it in.
Maybe I'm wrong. Maybe it wasn't just. I'm not just saying. Yeah. Go ahead.
Does Saudi Arabia want to kill shale? The answer is no. Does OPEC want to kill shale? No. Do they need shale to grow? Yes, but not at a very high rate where shale can take all the growth and demand. We need the shale. They realize.
So we were there. We were there, and this was how they managed it by knocking out some producers. I mean, a lot of these wells are capped now, right? They're not coming back online.
Well, the whole idea here is if oil demand is growing by 1 million barrels a day per year, they don't want shale to take the 1 million barrels a day.
Yeah.
They want shale basically take, let's say, for example, I'm just making up those numbers. Let's say 400, they will let shale grow at 400, I think, without any problems. If shale exceed that level, probably they will have different thoughts. But generally speaking, the reason why I don't believe in $100 in 2021, as you know, on your other show, we discussed this a couple of times, is not only OPEC and the spare capacity they have, it is really the use of the strategic petroleum reserves of China. Because China perfected the game and they started using the SPR in May of 2021 to prevent prices from going any higher. And it is very clear from statistical analysis right now is the threshold for China is Brent around 70 to 72.
You know, that's so interesting, Anas, because even until this moment, I thought, you know, part of the break that we had recently from the $85 level to the low 60s, besides just being a contrarian trade, was basically because of our action in the SDR, the U.S. release. But you're saying it's China that they have more leverage over the oil market than the U.S.?
The Biden, let's call it the Biden strategic petroleum release, has very little impact, if any, on the market. It was China, and I'll tell you why.
So China was behind this big break that we had.
Absolutely.
We reached their tolerance here. Okay.
Well, China did several things. One of them basically is when they use the SPR, their imports decline, and therefore the demand, the global demand for oil declines.
Okay.
So that's number one. The other issue is when they release large amounts, which we don't know, by the way, until today, we don't know how much they release.
It could still be jawboning like the Fed did after COVID with bond markets.
Yes. So what happened is they do export products. So when they release SPR, their refiners basically produce more and they would export more. So they hit the market from various ways. Their imports of crude declined and their exports of products increased. So they affected the market both ways in this case. The other issue is they did really kind of manage other areas, because people do not realize that China is not only about China. Chinese oil companies are all over the world.
Yes.
They are all over Africa.
Yeah.
So they can literally manage the oil market in a different way. So China in 2020, it changed. Basically, even before that, it really started in 2018.
Well, they have an oil exchange. They started, didn't they? I mean,
yes.
So this was part of their master plan of having some impact on the oil market. I think that was what, a couple of years ago they opened that exchange?
Yes. But the idea here is in the United States, the regulations for the strategic petroleum reserves require the president to have, in a sense, the president cannot issue an order unless there is a case of emergency.
Yeah.
In
Not
China,
just for
that's not
political
the case.
heat that he's taking because gas prices are going
up. In
up.
China, that's not the case. There are no regulations. They can use it any way they want to.
They can do it. He can do anything he wants, anytime, any day.
Absolutely. So they bought a lot of oil at $10 and $15 in April and May and June of 2020.
Yeah.
And then they released it at 70. So there is a big financial incentive to that too. And the idea of the SPR, because some bullish people, those who are bullish on oil and they think oil prices will go above 100, and I'm talking about 2021 here, they said, well, they are going to replenish that oil and therefore prices will go up. Well, what they missed is China's idea was they want to play the seasonality. So I can sell high, wait until the prices decline because of seasonality, and buy again and replenish that oil. So
they're master commodity traders.
Absolutely, which means that
masters.
We cannot be bullish just because they are filling the SPR. They are just preventing prices from declining farther.
Okay. There may be some headwinds for oil. If the Fed goes ahead, you talked to a gentleman earlier, was talking about 6 rate hikes in 2022. So if they create, or China, which is also trying to deleverage still at the same time they want to manage prices, mainly lower, could that be a headwind that, is it worth having a recession to take down prices? Will it even work this time if we have multiple hikes, take the Fed funds rate up to about 2%? Is that going to have impact on demand?
Let me explain it in a way, kind of a different silo in a sense.
Okay.
If you recall from year 2000, we've seen truckers demonstrating throughout Europe and blocking major highways because of fuel prices.
Yes.
We've seen farmers basically blocking the highways because of fuel prices. Why is not happening now? The reason why, there are 2 reasons for that. And this back to your point about the federal fund rate, etc. Because oil is priced in US dollar. If we have no change in oil prices and we remain at 80, but the dollar keeps going up,
yes,
let's say it goes up by 10%, then the price of oil in other countries will go up by 10%, although the price of oil is still the same, just because of the exchange rates.
Right.
So
are you anticipating a stronger dollar? Since you brought it up, it's got to go into your analysis, a currency effect in the oil market.
Yes. So what happened in this case is if we have a continuous increase in interest rate, the dollar has to go up in this case, and that's going to affect the oil market. Things are going to be expensive in other countries. The reason why in Europe in particular, we don't see those truckers demonstrating anymore, because between 2000 and now, their real income doubled.
Because of
So-
government subsidies?
No, just the growth.
Okay,
Just the growth. So
All right.
that massive increase in real income lowered the impact of oil prices on them. That's why they are not demonstrating at higher price. So can they handle higher price than 80 right now? Yes. Can they handle a higher dollar right now? Yes. But we have to be mindful of that threshold. Once it hits, 2000 will be repeated again.
China doesn't want a stronger dollar.
Absolutely. I mean, you know, they've been managing their currency for a long time, and we'll see how they're going to
Yeah,
react to that. But speaking of China and speaking of the United States, it is very clear from statistical analysis that China threshold is around 72 Brent. Anything above that, they will use the SPR. For the Biden administration, it's about 85 for WTI. Sorry, that's my mistake.
Brent,
85 for Brent
yes.
and 78 for WTI. So we have those two political thresholds we have to worry about once we had them. So we'll see. We are at the edge right now for the Biden administration. So we'll see where we are.
Okay, opportunities in 2022. What areas are you looking for? Is it still a good time to accumulate oil-related assets? A lot of people think it's the best trade of 2022.
Absolutely. And we have an issue here. I think many of my colleagues will agree with me that many oil stocks did not keep up with prices, which means that we still have room to go.
Okay.
And
Yeah,
the reason why, because
is
of the hedging in 2019 and 2020. Most companies hedge at lower prices.
Yes.
So their profit basically was not did not match the massive increase in prices. In 2020, that's a completely different case. So we are going to see massive increase in cash flow as a result of that in 2022, if things continue like this in 2023. But after 2020, and many people did not like my call that we are not going to see $100 oil in 2022. Of course, there are reasons for that. The situation might change if we lose Kazakhstan oil, because they produce about 1.6 million, which is a very significant amount. And Libya basically is really in turmoil right now. So if we lose the Libyan oil and the Kazakh oil at the same time, we might be heading toward $100 in this case. But again, these are ifs. But if we take politics out of it, there is no reason for $100 in 2022. But starting 2023, this decline in investment that we've seen since 2015 is going to hit really hard.
Okay.
And we are going to end up with various problems as a result of that, simply because if you look at shale oil production in the United States, it is increasing. I believe that will break another record by 2023 or 2024. So we are going to, US production is going to go way, way higher than today. The problem is all the increase in shale production in recent months was condensates. It wasn't crude. And there is a big question mark on that. And US refiners do not want condensates. That's why US exports increased substantially in the last 2 months, because we don't need it. So we are going to go back to that crude quality matters, if you recall that hashtag on Twitter. That crude quality is going to hit really hard if shale quality continues like that.
Okay, so I guess, you know, the man on the street's opinion on energy is, oh, well, everyone's going to have an EV and who's going to need gasoline. And I think you have a story about what's happening in Norway, one of the countries that have done a very strong adoption of EVs, and what's happening to gas consumption. So go ahead.
That's kind of very strange situation, because sales in recent months, sales of electric vehicles of all types reach about 92% in Norway of total sales. And for 2021, the percentage is about 65% of total sales. Yet, diesel consumption, and for about 55% of passenger cars in Norway run on diesel. Diesel consumption in Norway went up by 7% in 2021 relative to 2019, and another 7% basically relative to 2020. However, there is a warning there that they changed the methodology, and therefore we cannot compare what's after 2020 to before 2020. But when you look at gasoline, the decline is only 5.2%. So you have sales going up of electric vehicles going up by 65%.
Off the charts.
And correct. But gasoline consumption only declined by 5.2%. There's a big question mark here. What's going on? Several
range anxiety.
Correct. Several colleagues from Norway pointed out on Twitter that for long distance, they still use their diesel vehicles.
Yes.
While they keep this for short distance. My issue basically with all of this is those cars can last between 7 to 12 years. And after that, let's say we are talking about, say, 2027, those subsidies and those benefits that led to this increase are not going to be there.
Okay.
So
Interesting.
will people switch back? And what's going to happen? Because the difference in prices and the difference in cost is very high. Now, we were promised that the cost of batteries will continue to decline. The cost of electric vehicles will continue to decline. We've seen this in the last 6 months. Everything's going up.
They have supply constraints too, don't they? With lithium is in shortages. I'm looking for a lithium mine. Also, the metal materials, they're kind of like strategic minerals that they can't get a hold of. So production of EVs may not be so simple and straightforward either.
Yes, about 3 years ago, I wrote a column in the Financial Times. And in that column, basically, I pointed out this, that before the shale revolution, and if you really believe that the United States launched wars around the world to control oil, the United States could have basically imported oil from more than 20 countries. Most of them are US allies. And yet we launched wars for oil and we lost billions of dollars and thousands of lives. The problem is if we convert the transportation sector to electric vehicles, we are going to end up with massive concentration of lithium and cobalt. So instead of importing oil from 20 countries, we'll import lithium from only 5 and cobalt. And some of those are Russia and China.
Yeah.
And even aside from Russia and China,
Great
Chinese
point.
companies basically control the production in other countries.
Another
So
great point.
So we have a national security issue.
Yeah, we have unreliable suppliers.
Correct. And as I said on Twitter, basically, if you think the Middle East is always in trouble, wait until you see the Democratic Republic of Congo.
Interesting.
Which produces 40% of the cobalt in the world.
Yeah, I mean, these are things that no one thought about because, we've come off 30 years of plenty of everything. Just in time inventory systems. And now we're out of time, out of product, and out of favor with a lot of producers. So yeah, it's going to be a major adjustment. I think what you saw in Kazakhstan could happen everywhere, even in the US, in my extremely accurate and humble opinion.
I think you are correct. And we got to watch what Russia's reaction is going to be, because I will not be surprised if, and I'm just making this up in a sense, so I don't want this to be quoted on this, that Russian buildup toward Ukraine may not be even against Ukraine at all.
The Baltics, maybe
it's Kazakhstan.
Oh, there you go.
Because if the government fail, basically, they might find support from Russia.
They share a border, right?
Yeah.
Ukraine and Kazakhstan share a border too.
So the idea here is, I don't think Russia is going to allow what happened in Syria to happen in Kazakhstan.
They're actually asking for help. The old Soviet states, so the government's asking for help right now.
So we might see Russian intervention.
All right. Well, you made
what happened in Syria.
All right. You know what? You made news today, and I can't edit this out of the interview, so everyone's going to know about your good guess. And
Thank you.
really appreciate it. And it's really great developing a relationship and being able for you to be here. And you're my go-to guy in the energy complex. I hope that you have a great trip to Saudi Arabia, to see your family, a great 2022. And inshallah, my brother.
Inshallah. Happy 2022.
Thank you, buddy. All right, so that's a wrap, everyone. I hope you enjoyed Anas. You could go to his website and follow his stuff. Okay, and you could find him on Twitter. So you could find him at anasalhajji.com and at Anas Alhajji on Twitter. So
Thank you,
everyone
Dale.
have a great day. Have a great trip, Anas. I'll talk
Thank
to you
you.
soon.
Bye.
All right, that's a wrap, everyone. Remember, don't just count your oil barrels, count your blessings. And Mike will be on in about an hour. Adios. Thank you, Anas.